Hey, what's up, my friends? So, in this exclusive video post, this is actually dedicated to all Singaporean stock traders out there. Because, in recent times, we see the STI market falling quite a bit. So, I have traders, dropping me private messages asking me, whether it's a good time to buy, whether it's a good time to sell, and they just want my, my analysis and to know what I think of it. So, in this video post, I will share with you exactly what I currently think of the local stock market. So how I'll go about doing this is, number one is that I will share with you the STI index in terms of relative strength compared with the other indices out there, right? We'll do a comparison with the S&P 500, the Nikkei 225, the Euro Stoxx. Then number two, I'll do a basic technical analysis on the STI index. Number three, I will share with you the top picks, alright, counters to trade on the SGX right now. And number four, I will share with you 3 simple rules to stay alive in this current market condition. So first thing first, let's analyze the S&P 500 market. So what you're seeing right now is the S&P 500. This is the weekly chart. This red line over here is the 20 period moving average. This blue line here is the 50 period moving average. So if you look at the grand scheme of things, right, in terms of the trend, the longer term trend, you can't deny that the trend is currently still up. I'm talking about the longer term trend, right? The longer term trend on the S&P is still up because clearly we have a series of higher highs and higher lows on the S&P. No doubt last week we got a very bearish close towards the downside, but I wouldn't say that, this is a downtrend. This could possibly be a correction or it could be something more, but it's still too early to tell. But in order to stay objective, for me, currently the S&P 500 longer term trend is still towards the upside. So now let's have a look at the Euro Stoxx. Again, this is the weekly chart of the Euro Stoxx, and similar story as the S&P. The trend, if you ask me, is still towards the upside in the longer term time frame. This is the weekly chart. But in the shorter term time frame, right, I don't deny that there could be possibility to look to short the Euro Stoxx. But right now, I'm just focusing on the longer term time frame, the weekly chart of the Euro Stoxx, and my bias is still towards the upside. So have a look at the Nikkei 225 as well, the weekly chart again, right? Longer term trend on the weekly chart, Nikkei 225 is still towards the upside. So right now, what I want to share with you is the STI index on the weekly chart. Have a look at this. Now, previously we saw the 3 different index, right? We saw the S&P 500, we saw the Euro Stoxx, we saw the Nikkei 225. When we look from left to right, it's very clear that the trend is up. But right now, when you look at the STI index on the weekly chart, I can't say that the trend is currently up. In fact, it looks like, in the grand scheme of things, it could possibly be in a range, or it could be something more than that, right? It could be a start of something more, perhaps even a downtrend towards the downside. So when I did this comparative strength analysis between the other indices around the world, I can objectively say that the STI index is one of the weakest index right now in the markets. Also, one thing to note is that look at the 20 and 50 period moving average on the STI. The 20 period has crossed below, right? The red line over here has crossed below the blue line over here. But when you compare that to the other 3 index that I've showed you earlier, for example, the Nikkei 225, the 20 has not crossed below it. You look at the S&P 500, the 20 period has not crossed below the 50 period moving average. Or you look at the Euro Stoxx, the 20 period has not crossed below the 50 period moving average. But for the STI, the Straits Times Index, which is this over here, it has crossed below it some time ago. So this is another clue that's telling you that the STI is currently one of the weakest index in the world. So that aside, that is my comparative relative strength analysis. Now let's look at STI on a daily chart. So I just plot in a few moving average indicator, right? I'll use the 200, shall we? Looking at the longer term trend of the STI, you look at the 200-day moving average. You notice that this black line here is the 200-day moving average, and it's currently pointing lower. It's telling you that the longer term trend now is towards the downside. This black line is pointing lower. And if I were to plot in my 50 period moving average, which would tell me the intermediate trend, it's also pointing lower. So it's telling me based on this daily chart, the intermediate trend and the longer term trend is lower, right? It's, I would say, a downtrend towards the downside based on the intermediate trend and the longer term trend. So for the STI, I'm bearish, just to share with you based on what I see on the charts. So this is just some basic technical analysis to share with you. So right now, if you look at it, previously what we had was this range over here. Clearly, price has broken below it. And right now, we had this sell-off towards the downside. So for traders who are looking to trade the STI index towards the downside, here is some trading ideas, some trading suggestion for you. What I like to do is plot in my 20-period moving average, use it red color, and this red line over here. And on the daily chart, you don't see much trading setup, but when you go down to the 4-hour, right now, you see that this 20 and 50 period moving average, it's currently acting as dynamic resistance. So for those of you who want to trade STI, right, who have a short bias and want to trade the STI index on the short side, I would say a retracement back towards the 20 and 50 period moving average would be a possible trading opportunity towards the downside. Stop loss will go beyond the 50 period moving average, and that will be your stop loss. As for take profit, again, that will depend on your trading plan where you want to take profit. If you believe the trend will continue to go down lower, you may want to trail it according to, when price makes a new lower low and lower high. So this is my take on the STI on the shorter term basis, right? But for those, I would say maybe longer term traders, right, looking for the next few months, right, who are looking to go long on the STI, where are some areas that you can look at? So let's look at the weekly chart. So I'll remove my lines to make it clearer. So on the weekly chart, you see, this is the weekly chart of the STI, and longer term area to take note of is this area over here. So I would say somewhere between 2.9 to 3,000, right? This area could potentially be an area where the STI could bounce from. So for those of you who want to get long on the STI, I would say pay attention to this area that I've highlighted, because this is a very obvious support area where many traders will look at. And it's definitely a zone that you want to pay attention to. And that's provided if you have a long bias, or that's provided, you are someone who wants to trade long term looking over the next few months. So now, let me share with you, which are my favorite counters or favorite stocks to trade right now on the Singapore Stock Exchange. Because, clearly you notice that, the weakness of the STI index is very weak. So needless to say, I would prefer going short on stocks which are, showing signs of weakness, right? Stocks which are clearly in a downtrend. So first, let me share with you. So before I do that, right, let me share with you a post that I put out some time back. I mentioned on my website, I think over here on July the 13th, I said something like there's a potential bearish flag on Ezra. Then I share with you my trading plan on how I look to trade it. I said that, you can look to sell the resistance at 80 cents, stop loss of 2 ATR, or you can look to trade a breakdown anticipating a bearish flag pattern. So let's have a look at Ezra. So this is the chart of Ezra. So basically what I was referring to is at this juncture, I saw this potential bearish flag pattern over here. I said that there's a possibility that this flag pattern could continue further towards the downside, because I noticed another flag pattern previously and this one over here, both were successful flag pattern, and I thought to myself, right, clearly the trend on this chart is towards the downside, and if this flag pattern does play out, right, we could see further move towards the downside. So right now we have a further move to the downside on Ezra, and to be honest, right, I do not know that this will unfold. I simply trade what I see. I could very well be wrong, and when I'm wrong, right, I put my stop loss in place, and I shared with you that my stop loss is actually 2 ATR. Let me share with you, right? I mentioned about stop loss because I always believe, with a stop loss of 2 ATR, because I always believe that I can be wrong when I'm trading. So I always want to use a stop loss, so I get out of my trade when I'm wrong. So this is the chart of Ezra. This is one of the counters that I would prefer to short because of his downtrend, right? Because of his weakness and because of this very clear downtrend. So this was the flag pattern that played out. So right now, right, the blue line is again the 50 period moving average, the red line is the 20 period moving average, and you notice that it's currently acting as dynamic resistance as well. So in the coming days, in the coming weeks, for those of you who want to trade Ezra, if price does retrace higher into this zone over here, this is a shorting opportunity for you as well. Your stop loss will go beyond the 50 period moving average, somewhere around here. And again, right, there are a few ways to enter it, whether you want to wait for a lower close or whether you just simply want to short when price comes into this zone that I've highlighted. This is entirely up to you, right? So Ezra is a counter or a stock that I'm looking at. So up next, right, another one that I want to share with you is actually Noble. So I think sometime back again on June the 8th, I made a blog post, June the 8th. I say, right, do not catch a falling knife on Noble Group. Again, I share with you my trading plan on how I look to trade it. Again, it's a similar setup. A pullback towards the 20 and 50 period moving average provides a shorting opportunity. Stop loss goes above the 50 EMA. So let's have a look at it. So I'll look at Noble. This chart over here. So I posted out on June the 8th. So I think, had you seen it in time, right? Over here, right? This is the dynamic resistance. So when price came towards this area over here, it was a valid shorting opportunity for you to trade it towards the downside. So for those of you who missed this, there was another opportunity in recent times when price formed this bearish pin bar over here. I'm not sure if you can see it, but there's a bearish pin bar over here, this one over here. And this is another shorting opportunity towards the downside. So for those of you who are not in this trade, again, all right, a retracement back higher would be a shorting opportunity for you as well. So one thing to note, to reiterate once more, there's absolutely no way I can predict that Noble would lead to this sustained downtrend. What I do as a trend follower, as a trend trader, I just look at the chart. I look from left to right. If price is trading lower, if I see lower lows and lower highs, the next question I ask myself is, where is a logical area to enter the trade? When I enter the trade, the next question I ask myself is, where would I put my stop loss if I'm wrong? All right, because I'll be honest, all right, I'm wrong very often in my trading, right? And the reason why I'm still surviving as a trader throughout all these years is because I always have a stop loss in place, right? Because I always am ready to admit when I'm wrong. So Noble is just another example to share with you. So Ezra and Noble are currently two of my favorite stock counters to short right now. So for those of you who have maybe a bullish bias, right, looking to long, right? So you may think, Rainer, so maybe I'm looking to long, right? Which counter do you think, or which stock do you think that, provides a long opportunity? So if you ask me, right now, I think one of the stronger stocks right now is currently Sheng Siong. Sheng Siong, you look at the chart of Sheng Siong, it's clearly, still in an uptrend. You saw the STI, it was smashing very badly, but Sheng Siong clearly is still looking, to hold up pretty well. So for Sheng Siong, an area to pay attention to is this support area over here. I think it's somewhere in the 80 to 82 cent region. So if price does comes into this region over here, you can look to, get long. How you want to enter long exactly, there's a few ways. You can, number one, right, just look to long when price enters your zone. Number two, you can wait for a higher close above the zone. So meaning price comes in, then it closes higher, right? Then you go long. That could be another potential scenario. So Sheng Siong is definitely one of the relatively stronger shares or counter right now that is currently trading on the SGX. So this is another stock trading idea that you can consider as well. And last but not least, right, before I end off on this video, I want to share with you 3 very simple trading rules to stay alive in this current market condition. So let me get more space. Okay, I have clean space over here to write. Number 1, risk a fraction of your account. Let's say for example you have a $50,000 account size. I wouldn't recommend risking anything more than 2% of this 50,000. So 2% of this 50,000, you're looking at about $1,000, all right? So on each trade, I wouldn't want you to risk more than $1,000 on this trade. So the most you can lose on one trade is just $1,000, and it's a 2% loss to your account size. So this is the first rule: risk a fraction of your trading account. The second rule is this: always have a stop loss. No matter how beautiful the setup looks, right? No matter how confident you are of a trade, you always have to use a stop loss. All right, a stop loss is there to prevent further damage to your trading account. A stop loss is essential if you want to stay alive in this trading arena for a long time to come. So second rule is this: always have a stop loss when you're trading. And last but not least, the third rule is this, right? Never average into losers, right? If you have a trade and it's causing you to lose money, one thing can only happen, which is it hit your stop loss and you're out of the trade. What you must never do is to average into your losers, right? Thinking that your average price is now lower and price can only need to, trade higher by a little bit more and you get out break even, right? Trust me, this is a losing proposition, a losing way to trade, and a very fast way to, go to the poor house. So never average into your losers. So let me give you an example. Say, for example, this is the chart of the STI. And maybe some of you are currently averaging into your losers. Just imagine, right? What if, STI slumps all the way back down, right? I'm not saying that you will, but what if this possibility that slump all the way back down into these lows of 2008 and 2009? And if you're averaging along here, how much more can you endure when you're averaging in, right? Trust me, right? You are eventually going to reach a point where you're going to puke and you're going to wipe out a large portion of your trading equity. So never average into losers, right? So let me reiterate those three simple rules for you once again. Number one, risk a fraction of your trading equity. Number two, always have a stop loss. And number three, never average into losers, right? This is three simple rules, very simple rules that will keep you alive in any market conditions, right? So that's all I have for you in this exclusive video post for my fellow Singaporean stock traders. I hope you find it useful. So if you have any comments, right, feel free to leave it below. With that, right, I wish each and every one of you good luck and good trading. I'll talk to you soon.